Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update 166 for Monday, 9th of December 2024. I hope you're well. I hope you've had a good weekend. I hope you're ready for what is going to be a rather busy and interesting week ahead. And before I kick off, for those of you joining us for the live session, if you could just confirm in the chat box that you can hear my voice and you can see the slides, that would be much appreciated, just to make sure that the technology is working in our favour rather than against us. That's fabulous. Fabulous. Thank you, everybody. Thanks, guys. Much appreciated. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, looking at strength and weakness within FX and indices markets, looking at a few charts of interest, and then look at the live markets. It is not a signal service. It is not trade recommendations. It is me just, sharing with you what I'm looking at, and you might wish to add that to your own watch list. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. If you're not aware, the VTP Stage 1 online course now, the basic VTP course, that is now free for everybody. That's available there. You can see it there either on the bit.ly code VTP free or on that QR code there. Okay, that gets you access to the online course and also access to the Monday night weekly coaching call, which will go ahead this evening. It'll be the second to last one of the year. I think tonight we're going to be covering pin bars. And if you want to listen to more about trading, then by all means join my podcast, the Togs Trading Podcast, me and Big Ian in Dublin. And you can see it there. Togspod.com is the link for it. Also, by going to the website, you get the access to both the video and the audio versions. And also, you can access Ian's trader blog and also the recordings of today's Monday Market Update. And if you want a little bit of education this afternoon, I will be doing a webinar for active trades called Monday Market Matters at 2 o'clock. You can register on their website or on that QR code. Today, I'll be talking about simple risk management. Okay, the basic element that everybody needs to get right, but most people fail to do so. So I'll just be sharing what you need to be doing in that. Okay. All right. There's the intro over. Let's cut to the chase, shall we? And let's dig into what we're looking at and what we're going to be focusing on for the week ahead. If you're new to trading or new to the Monday Market Update, this might look a little bit intimidating or overwhelming, but it's not really. It's once you understand, it's quite simple. And these are just some snippets from the STAM, which is my model that I sort of work on and still do by hand every weekend. The reason I do that is because it gives me the best connection with the market. I find puts me into best practice, gets my head in the game for the week ahead, and it helps me sort of focus on where I need to allocate my time, energy, and resources for the week ahead. So, what's this data telling us? How do we utilize it? Well, we are into week 50 of the year. Here we are for the 9th of December. And I'm always looking, where's the strength and where's the weakness within the FX markets. So here we go. We haven't changed from last week. Japanese yen still remains top of the pile with the US dollar in second place. A little bit of a continued sell-off last week in the US dollar there, but nothing to really terribly get excited about. Of course, with the data that we had last week, okay, in terms of non-farm payrolls, bit of a mixed mixed session because although the numbers was good, the unemployment rate also ticked up as well. So everybody's basically feeding in the data into what needs to be what the Federal Reserve needs to take on board in terms of their decisions for next week. There's quite a few decisions going on this week, though. We will see. So tonight into tomorrow, we have the RBA, Royal Bank of Australia. They've got their rate statement. They're presently languishing down at 7. Maybe we'll have a little look at them if we have time there, okay? But we can actually see for today, this morning session, the Aussie's been well. Nobody's really expecting an interest rate cut, but I think people are probably expecting them to signal their dovishness as some of the Australian economic data hasn't exactly been, hasn't been exactly sort of encouraging. Whether this is just the pump before the dump, I shall have to wait and see. We've also got Wednesday. We've got Bank of Canada. Now, of course, the interesting thing is here is if you look at that, 6, 7, and 8 of the STAM at the moment are all the Comdolls. Okay, so Canadian dollars at 6 has got the Bank of their rate statement on Wednesday afternoon. People are expecting them to cut from 3 3/4 to 3 1/4. Right, that's what the expectation is, and of course that will have an impact on Canadian dollar, something that doesn't really have a huge amount of confidence in it anyway at the moment. But the fact that the Comdolls are at the bottom of the pile, that in itself is telling you something also. We've also got the S&P on Thursday. They've got their policy rate, and people are expecting them to cut from 1% to 3/4%. But you can see there, they're still holding on into third position there. Okay, there's still an element of strength there. So if you've got Comdolls at the bottom of the pile, and you've got Japanese yen and Swiss franc and US dollar at the top of the pile, you might be sort of, if you're looking at it in a row, you might be looking at it as a bit of a risk-off sentiment to sort of filtering into that. Whether that's just people sort of, trimming positions in front of the end of the year, or just basically banking profit so they get a good bonus in January. And there's a whole host of reasons. You can choose your own narrative. Close to home, euro had a little bit of a bump from being the bottom of the pile, but I think it's more to do with the weakness of others more so than any kind of encouraging strength in Europe. Certainly in terms of the political. The kind of political ways that are coming out in France last week, where Mr. Barnier's his administration collapsing, and we will see how that actually particularly plays out. So far, Macron has said he's not going to step down, but we'll see about that. But Europeans as well, they're okay. The euro, they've got their rate statement on Thursday as well. People are expecting a bit of a 0.25% cut again in there and stuff as well. So it's a busy week for central bankers. Okay, everybody getting their their rates cut. Before the Fed next week and stuff, and then the central bankers all they'll retire to the slopes and stuff and what have you, and ski for a month and stuff before they actually have to do anything. But anyway, that just might be me being a bit cynical. Close to home, sterling remains fair to middling, doing nothing really. I mean, I've had a little bit of a bump against a couple of the currencies, which we'll look at in a moment. Not unsurprisingly against the Comdoll. But Mr. Starmer's kind of the data last week was showing that in the last month or so, in fact, since Reeves' budget, we've seen the largest decrease in the size of the FTSE and also the hiring rate, okay, is starting to drift down. Okay, people are basically either cutting jobs or just not hiring based upon the sort of their response to Rachel Reeves' budget. There, not really a shocker there, is it? That shouldn't really surprise too many people based upon what we've seen going on. When we look at some of the indices and commodities, well, what we see, and we'll look at the chart in a moment, Dow, the S&P, and the Russell, they're all in, through my model, like strategic buys still. Okay, price action, it's kind of interesting, which we'll look at in the moment. Price action, and a few of them closed at new highs, but it was they weren't exactly really bullish candles, but we'll look at that in a particular moment. DAX, is just still absolutely, sort of churning its way higher, which we'll look at in a moment. FTSE is a strategic buy, but as I've said all along, it's a complete laggard compared to the DAX and the American indexes as well, and a lot of that I think is the overhang from people's response to the budget. Yeah, and ASX has also been a strategic buy as well. On the flip side, and we're going to look at it in a moment, we still remain strategic bearish on oil, and actually we're tactically bearish on gold and silver. VIX is still bullish, all right, and Bitcoin is still strategic buy there and has been for a good while. So not massive shock there, but that will make a bit more sense when we look at the live markets in a moment. Okay, so let's have a little look at the charts of interest. These are just a few charts you might want to add to your watch list. As always, we can learn from them. There's opportunity taking on board. So, of course, what we have seen over the weekend was we saw the rapid collapse in Syria. There, okay, Mr. Assad, him and his family thrown out after 50 years. Okay, I'm still waiting to see whether he actually made it out of the country or whether the dubious reports that I was reading yesterday that his aircraft might have been shot down. We'll see more about that in a moment. But there's many layers to this. But of course, naturally, that is going to have an impact in terms of people's confidence, in terms of whether we have risk on or risk off sentiment. People are looking like, what is the future of Syria going to look like? So HTS, who are the kind of, let's say, the largest, the rebel parties, not exactly not exactly the kind of people you want to invite round to meet your mother, shall we say. So all of these things will have an impact on certain parts of the energy sector. So I thought, well, this is a chance for us to look at one or two of them. Oil, this is WTI. This is the weekly chart. What I'm kind of interested in, okay, is that you can see for yourself, many people would look at this and say this is just a very large descending triangle, okay? The sort of, the highs, okay, our highs are getting lower. And we have this kind of base between around about 67 and 70. You can see for yourself, okay, over the last couple of years, we've had that. And, we're kind of sat on there at the moment, are we there? About, as I said, about $67. As I said, there's a base there. But, once again, as we're saying, our highs are getting lower, and kind of last week was a little bit of an inside bar, pin bar bearish, down at the lows. So I'm going to be intrigued to see is, are we going to get basically a crack? Okay. And if we crack 67, we're going lower, or, are we going to get a bounce off there? Okay. Are we going to get a bounce? For me to sort of get any inclination that we've got a short squeeze happening, well, I'd want us above that weekly, above the $70 and above the weekly 20. If that was to happen, I'd be saying, well, yeah, we're into bearish squeeze sort of territory. But as you can see, it's coiling up there. Okay, it's coiling up, and I'm wondering whether the kind of events of the weekend are going to have an impact there. Okay, because to be fair, it could punch it either way. All right, could punch it either way. But it's clearly it's coming to a decision point where it's an inflection point where it's going to have to make a decision. So I'd be watching that if I was you. Next one, this is natural gas. Okay, natural gas futures. So of course, this is the weekly chart. We have been intrigued about natural gas for the last 2-3 years, mainly because effectively the start of the Ukrainian war, okay, the Ukrainian conflict there, and the impact that had on Russian exports to Western Europe and Germany in particular. All right, and you can see that from a couple of years ago the impact that had on natural gas futures prices. But actually, I'm looking at a longer and bigger picture. Many of the people have forgotten, or we have lost sight of the fact that the kind of the civil war that had been ongoing in Syria. There was lots of reasons for it happening, but one of the reasons that the Russians so kindly and happily and gladly took over the Tartus port area there on the Syrian, the west coast of the Mediterranean, is that about 15 odd years ago there were large reserves of natural gas found in that part of the world, the Eastern Med. I've always taken an interest. I used to spend my summers serving in Akrotiri in Cyprus, so I've always had kind of an intrigue in that part of the world. But of course, there were large large fields for natural gas found there in the Eastern Med, okay, Cyprus, that would have effectively, helped the EU and basically, made Cyprus, Greece, Turkey, Syria, Israel, Egypt, probably all sort of benefit from tapping into those natural energy resources. Of course, the biggest people to lose out of that would have been Putin's Russia, because Putin's Russia at that time was effectively providing most of the natural gas to Western Europe. So invariably, he was the biggest one to lose out on that. So he was very happy to basically sort of cause trouble in Syria, so that basically it's put a complete halt on any of the exploration or sort of bringing out the energy out of the seabed of the Mediterranean and stuff. And so he's had 15 years of doing very well at that. But of course, now that is happening, and now that we'll see what the Russian position in Syria is like over the next week or so, well, then invariably that could have a huge impact not only on Russia in terms of demand for their natural gas at a time when they need all the currency they can get, but also, okay, the Germans might be absolutely clapping and happy with joy at the sound of the end of the Syrian civil war, because if it means that Europe does tap into those natural gas resources in the Eastern Med, then invariably that will have an impact, on Western Europe, and of course that will have an impact on natural gas futures. From being here up and underneath, tickling the soft underbelly, okay, of $10 a ton. Well, we then flirted with like kind of $2. You can see $2 has been a bit of a level there. If some people might even say a bit of an inverse head and shoulders there, okay, a bit of a neckline there around about the $3 mark. We've had a little bit of a rally this kind of last couple of months, but we're sort of in that area around about around about $3 to $3.50. Okay. As I said, I'd be interested in short term. It wouldn't surprise me short term if we got a bit of a pump. Okay, because there's uncertainty. All right, and people were working that we're into the winter, etc. But who knows if there is as I said, if there's an end to conflict in at least Syria, and the knock-on impacts that has, and if there's an end to conflict in Ukraine, well, then invariably, I see that starting to have an impact on longer term natural gas futures. Okay, so this is going on my watch list, but it might be a sort of a tactical trade, but then I might be looking longer term in terms of actually how could I benefit from let's say the geopolitical moves that we're going to see over the probably the next 1 to 10 years. All right, so that's energy. Let's go somewhere a bit different. Let's have a look at a couple of banking stocks. So first one, this is DB, Deutsche Bank. This is it's the American listing of it. Deutsche Bank, those of you who've joined us on the Monday market updates over the last couple of years will know that I'm not the biggest fan of Deutsche Bank. Okay, they're generally kind of a good sort of reflection of the overall German economy. Namely, they were a bit arrogant, a bit complacent, and shocking to do business with. And eventually that ended up showing in their share price. And share price, collapsed a few years ago, and was really for a long time just pivoting around between about $6 to $10 there. And you can see for yourself, okay, $10 or has been pretty said solid pivot level. But actually, what we have seen is we've started to see kind of pushes out there. All right, over the last year, we saw a bit of a move up. I actually was thinking, maybe this is probably my bearish bias that I thought we might be getting maybe a double top here, and I was looking at to see whether we're going to get a double top and then return to the €10 zone. But actually, so far on the weekly chart, that's actually looking more like a bull flag there. Okay, hopefully you can see now. From VTB stage one, normally I like bull flags to finish on a very strong bullish candle pattern, which it hasn't here. But listen, you have to trade what you see, and at the moment that's sort of pushing its way up to $18 there. So maybe it's going for a triple top. I don't know, but personally, I think any close above sort of that sort of $18 mark and close and hold above it for me would be bullish for Deutsche Bank there. And then close to home, Lloyd's Banking Group. All right, weekly chart here again. For a long time, okay, we didn't really talk about it for a long time because you can see for yourself that for many years, all right, back since 2021, we've really been in this kind of 40 to 55 pence area. Okay, you can see for yourself there, just in that range there for a few years there. Okay. And then basically earlier this year we got a little bit of a breakout, and we pushed up, and then we printed this key reversal, okay, which basically popped down a little bit, but then actually pushed up again. Then we printed another key reversal up here at sort of 64 pence, another bearish key reversal, and now what's happened is we've traded back into that sort of zone there, back into that 55 pence mark, and I'm curious now to see, are we in a little bit of a range there, and is the 50 period moving average going to act as support? If it does, well, then, I think price has to sort of shoot its way up, okay, back towards 65. But if it doesn't, and we see 55 acting as a top and the red bearish, red 50 period moving average turn bearish, well, then actually, I'll be looking at, well, we've effectively, we've punched out and we couldn't maintain it and we've fallen back into that zone. So I think we're at a point where we're looking to make a decision on that, okay? Market's looking at where it wants to go. So as I said, that'll be added to my own watch list. All right. Okay. So there's, as I said, some charts of interest. Why don't we switch across to the live markets now and see what's going on? So if you just bear with me for a moment, we'll switch across and take a look at what's happening. Okay. So I am hoping that you can still hear me. I'm hoping that you can see the charts here. This is just one of my indices profiles. Let's get the old drawing tool up. So I've got Dow here, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. Okay, so as I said, oil we've looked at, and oil seems to be sort of sat there. There is support there at 67. I'm waiting to see, is that going to break? Okay, and are we going to fall through it, or is it going to be a bit of a bear squeeze and punch our way up there? That's what we've just had a look at. As I said, if we look at the American index, especially the Dow, we had, another weekly close at highs. All right. Same with the S&P 500, another weekly close at highs. All right. So you don't want to be fighting that. Okay. I try and tell new traders, don't bother fighting All right, don't bother fighting the market when it's in a strong trend. You want to find a way to sort of ride it. But certainly that candle isn't huge bullish candles like we saw on the Nasdaq last week, which basically had a very bullish close to highs. The Russell itself actually sort of rolled over a little bit. Okay, a little rolled over, a little bit of a pullback. Not a surprise after the sort of the position that we put on the week before last. Okay, in terms of what we were seeing there, so you can see how that's happening. So, I wonder whether we just go a little bit quiet. As I said, we've got a lot of data coming up this week. We've got a core CPI for the Americans tomorrow, along with a whole host of other data throughout the week. And then, of course, we've got that Federal Reserve coming through as well. Not this week, but next week. So whether people are just starting to sort of trim their positions or hold fire until that happens, we shall wait and see. But close to home, all right, let's have a look close to home. As I said, the DAX, Bosh, you can see there. Okay, once again, that just has basically crashed its way there to all-time highs, regardless of what you're hearing in the news about Mr. Schultz, effectively being a dead man walking, or Mr. Macron, effectively a dead man walking, or the French and German data coming out there. It's not had an impact on people wanting to buy the DAX, and you can see there, okay, and a lot of that's driven by some particular stocks, but you can see for yourself that has just worked its way up there, right? It just continues that. So this is a great, reminder for everybody that the stock market is not the economy, all right? You have to sometimes remember that. A quick word about the Nikkei, because I still see it as basically coiling up there. That's what I look at there on that weekly chart. I was talking about it so far. If you look at it so far, the 20 and the 50 are held up as support, dynamic support there, okay? And but it's coiling up before it makes its move, all right? And that will happen, I think, if we get a Bank of Japan meeting and statement out of them. But I think until that time, I look at that as that's coiling up, waiting to make its move. And then close to home in the UK, as I said, the FTSE is Salmon Bravo, but it's a complete laggard compared to all of those other indexes. Okay, yep. The last couple of weeks we had a bit of a push up, but you can see last week's was a bit of a pinball there, which we're going to cover on the stage one call tonight. Yep, we've had a little bit of an okay start to the week, and we've not really I think we've got GDP on Friday morning. That's really the only UK data this week the only major UK data. But as I said last week, some of the kind of the other informal economic data coming out about the UK since the budget wasn't exactly complimentary, and I wonder how long that's going to hold on with us there. But as I said, there's nothing there. Certainly on a strategic version, there's nothing really there to interest me at all. All right, let's have a quick look at a couple of commodities, and then we'll go to the FX pairs. Gold in the weekly chart, you can see that there has been a fantastic trend, but then it's kind of come off its heels there, or rather, the 20 period moving average is still acting as support. All right, so and we're still the dominant trend is still bullish, even though we kind of cracked that fractal, but I view that as kind of it's just going a little bit sideways. It's just coiling up. And certainly when we go down to the daily chart, you can see for those last 2 weeks, the price action has been pretty dull, hasn't it? Especially if we go down to the 4-hour chart, kind of 4-hour chart for last week. Once again, in fact, you might say for, as I said, for about those kind of 7-8 days, it's been pretty dull, hasn't it? Really, pretty dull. Nothing really terribly exciting to work away there. James says gold changed behavior after the election. Yeah, I wouldn't. Yeah, I wouldn't disagree with you on there. Okay, I wouldn't disagree with you on that. All right, that has just had and we covered that as part of the Trump trader actually, as it was one of the kind of losers out of that. But you're absolutely right. But it's for shorter term traders or shorter term swing traders, that's pretty hard work. I'd say there. That's a bit challenging. If you look at silver on the weekly chart, the way I look at this is we are still sat above 30. And we're also on the weekly chart, we're still sat above the weekly 20. Okay, so there is, we've had a pullback, but we are still sort of, have a bullish bias. When I go down to the daily chart, I look at that, that's a couple of really nice bounce offs the $30 range. False breakouts there. Okay, bear squeeze breakouts. Okay, for me now, there's the daily 50. We have to get above there, okay, on the daily and hold above it for me to want it to be bullish as a swing trader. Lots of nice intraday trades, okay, short-term swings for a couple of hours, but daily above the daily 50 for me to sort of confirm that we're back in the game, so to speak. Quick look at Bitcoin's there, okay. Bitcoin in the weekly chart, where we're mincing around 100. No surprise there, okay. We had a real. If you look at that, we the way we popped up there, okay, to 100. No surprise that at a high wave candle. No surprise that I'm sure that there's probably lots of profit taking at the big round number of 100. Lots of people probably buying in. Lots of people with basically sort of just trying to short at 100. All right, so no surprise that it's actually very volatile around there. At the moment, we're just pivoting around there. Okay, that's what we'll be looking at there. All of that in terms of Bitcoin and gold and stuff, etc., also has an impact on what's going on with the dollar. So we'll have a quick look at the dollar and a quick look at sterling as well. We always finish on sterling on our weekly sessions. This is my dollar profile here. Dollar profile. So I've got Aussie, Kiwi, Euro, dollar CAD, cable, dollar yen, dollar Swiss, and the dollar index. So I get a snapshot of just get a good snapshot of all of the dollar and against the major pairs. So have a look at the dollar index. We've had a long, strong run, all right, but we can see that actually, we had that's a swing point. That is a doobie. That is a version of an evening star. Last week's was a bit of indecision as well, not really there. If we go down to the daily chart, as I said, just running into before Thanksgiving, uh, I would look at us there. We're just bouncing about there a little bit. Maybe this is also another explanation for gold in that it's the last sort of week, 10 days has been less than exciting, shall we say? We go down to the 4-hour chart. Okay, last week we were certainly constrained there by the 50 period moving. Yep, no problem, Robert. Thanks for joining us. You're very welcome. We were constrained by our level here about 105.75, and then the 4-hour 50 as well, tightening us up there. And that's as I said, we're also seeing that in gold as well as a little bit. Everything's a little bit dull, and it might be end of the year, waiting for that Fed Reserve and what they're going to make their decision on. All right, and everybody's just holding fire until that time. If you look on the flip side of the dollar index, we're looking at euro dollar. We had a rejection candle followed by a bullish inside bar candle, followed by a kind of indecision candle. All right, okay, a doji candle there. And so it's just showing us that actually, as I said, the last couple of weeks, everyone's just gone a little bit. Everyone, after the giddiness, after the post-election giddiness, okay, where we basically bought dollars, sold euro, it's gone a little bit sideways. And I wonder whether we're going to wait for this week. As I said, there's a lot of data out this week and then Fed next week. And I do wonder whether, everybody's just waiting to sort of basically get a bit of clarity on what's going to happen there, right? So, that's a show. We've got, I'll be looking at the fact that all of those lows are higher lows there, all right. And we've got a bit of a neckline there, all right, building. You might say, well, Paul, is that like an inverse head and shoulders there that we're building? I wouldn't fight you over that. Okay, the 20 period moving averages looks like it's flipping, but it's a bit too early to tell this. We've got the rest of the day to go through. But once again, for me, it needs to get above the daily 50, all right? It needs to get above there to show us that we've had a kind of a bit of a euro resurgence, all right? So, wait and see. Don't be surprised if this goes sideways until the sort of the ECB meeting on Thursday and any comments they kind of make out of that. And that's a pretty standard picture there, along the way, okay, across all of those dollar pairs, right? Dollar is still strong, all right? We've come off the last couple of weeks, but not enough to basically call a top in the dollar or a reversal in that at the moment. I think we basically this week is a week of just of literally keeping your powder dry and waiting to see how markets react to some of those rate statements. Aussie, as I said, Aussie dollar here. This is the Aussie pairs, okay, and you can see it's been pretty glum time for the Aussie there against the US dollar, against the Canadian dollar, okay. ASX has been powering its way nicely through there. But even Aussie against Swiss franc, all right, has been there. Pound against Aussie. I mean, pound has been weakening, but not against the Aussie. Even the euro, when it's bottom of the pile, was still strengthening against the Aussie. Aussie, weakening against the yen as well there. So, and the last couple of weeks weakening against Kiwi dollar as well. So, Aussie and Kiwi they're battling out for the bottom of the stand. So, Aussie has weakness. So, I said I think nobody's expecting a rate cut tonight. All right, but people will be interested to hear what they've got to say. All right, the RBA have got to say in terms of how they start to turn a bit dovish on the economy and on the Australian dollar. All right, let's quickly finish. We're going to overrun by a minute or two, but always finish with sterling close to home. Okay, here we go. Cable on the weekly charts. That the reversal that we saw in the dollar index, followed by a bit of indecision. I look at us here. We're sat under the weekly 200, the weekly 50. It wouldn't surprise me if we went in to tap that, but then reversed off it. Okay, looking at the daily chart, it's a little bit more. It's a little bit more vigor to it than the euro, all right, against the dollar. But it is once again. Some people might say, "Well, Paul, that's a bit of an inverse head and shoulders," and I wouldn't fight you. The 20 is flipped, okay. The 20 is flipped, but equally, we're coming into where there's the daily 20, 200 and the daily 50. We could go up there, and I'll be interested to see how do we get up there. Do we push up and push through, which means we're going back to 130, or does this act as resistance, and then we basically work our way down again if we get more weak UK data and more strong US data. So at the moment, I'd be saying that's a very shorter term intraday channel working its way up. But as I said, that where that 200 and where that 50 meets later this week, I think that's going to be a key decision point for us in cable. Pound against yen. We had a great rollover. This is the weekly chart, and we had a great rollover there. Lower highs, rollover beneath the 50, and then a little bit of indecision there. And this week we've started this with the push up. No surprise for me. Push up into the moving averages and see is this going to be real resistance here? Yeah, here you go. We can see that. Sterling kind of, I wouldn't surprise me if it drifted up to that 20 there, okay, down to around about 109, 193.24, and then make a decision there. What are we gonna do there on with pound against yen? Pound against Swiss is still flattering to deceive me, all right, in terms of I still see that as coiling up. Okay, last week I was interested because we had an inside pin bar. I thought maybe we'll get a push to the top of the range. That didn't. It couldn't get past the 50. Up, down. Okay, yeah, we've had a little bit of up this morning, but it's, as I said, coiling up now. And now I'd probably sort of update my trend lines and think little's going to happen there before the S&P on Thursday. I think we'll also about a bit. As I was saying earlier, the STAM have the Aussie dollar, Kiwi dollar, and Canadian dollar in the bottom three. And you can see there, okay, even though sterling has been weak, you can see that it has over the last couple of weeks, it's rallied against the Aussie, the Canadian dollar, and the Kiwi dollar. And that's even though sterling has been weakening, it's still managed to strengthen against those three, which is giving us an indication, as I said, those Comdolls, all right, are not particularly happy. Finish off with euro against sterling. Euro against sterling as a swing trade. If you're trying to swing trade off the week chart, it's been not easy the last couple of months. All right. We had an inside bar there, okay, a couple of weeks back. But you can see for yourself, we've pushed down to this. We have pushed through 83, and we actually closed beneath it. But I'd say 83 is still the pivot, and I'll be waiting to see, as I said, what the ECB come out with on Thursday, okay, to give us a bit of a more clarity on the overall direction for the rest of the year. Okay, ladies and gentlemen, let's finish there. Apologise, I ran over a little bit, but as I always say, I've got so much to try and share with you. I want to try and fit in as much as I can. I appreciate I do race through it, so that's why it's recorded and it'll be on the blog in a couple hours' time. If you want to watch it back at a slower pace and stuff, you're very welcome to. I hope it's giving you just a little bit of help, giving you a little bit of insight into the markets. As always, I wish you the very best of success in your own trading. If you're on the VTP, the stage one will be call will be there at 7:00 tonight. For the rest of you, have yourself a great trading week, and I'll look to speak to you soon. And just actually a final thing is that next Monday session will be the last Monday market update of the year. Okay, so have a great week, and I'll speak to you then. Cheers. Thanks, everybody.